Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are looking at metals and gold prices. After a brief dip, post FOMC trading back to the mean, actually very close to where we were when the FOMC announced on Wednesday at 2 p.m. Eastern, right around 1200. We didn't quite get there late afternoon on Friday, but we were close enough to say that we sort of erased what we saw declines on Thursday. We basically erased them, and the market comes back to that neutral point. And right now, that really is the trading point. We need to get above 1215 or below 1287 or 1187. If we don't do that, the market's just going to kind of continue to consolidate and coil here. Remember, gold has been falling out of favor going back to April with not only the stronger dollar, but with higher interest rates. And now we've just kind of started to build this base right at 1200. So we've been unable to break out to the downside. We've been unable to see any sort of rebound bounce higher. And the market will just continue to trade the range. And if you look at the dollar today was very well bid. It's been very well bid since the FOMC announcement on Wednesday. So the dollar really not having an adverse effect on gold prices today. Yes, gold was down early, but it recovered quite nicely. And like I said, got back almost to where we were on Wednesday when FOMC was announced. And if you look at the positioning, speculators were all in short, waiting for the stronger dollar, waiting for the hawkish Fed, waiting for the forward guidance to take us to newer and higher levels, and that would ideally push gold prices to new lows. And while it looked like for a brief moment that was going to be the case, it wasn't. And my sense is that when it didn't go all in down on price and we started to see it kind of rally back up towards that FOMC 1200 level, I'm guessing some of those shorts have started to cover, and will be interesting to see how the CFTC report comes out, which will come out later this afternoon, how that will be reflected. Are those shorts getting out? Were they maybe a little fearful that we didn't see a bigger push lower, or at least a more steady, consistent push lower? And if that's the case, then we're going to have to wait and see for the next move, because we're not going to see shorts pushing or longs pushing. It's still just kind of a wait and see game. And that right now means that we're going to remain in this range, this 1187 up to 1215. That's going to be our range for the foreseeable future. Yeah, we have employment and earnings coming up in October, but right now the next big event that will be for the Fed will probably be the FOMC minutes, or could be advanced GDP growth that we get at the end of October. So right now, gold prices in the middle of the range, hovering, not seeing any daylight for a breakout, at least not today. This is Todd Colvin coming to you from the floor of the CME Group.